Hello, everybody. This is Professor Lambert in Business Valuation of Privately Held Companies, lesson number 3. Today, we're going to talk about the economic section of the valuation report and all the information that you need to gather to prepare that section. So, what we're going to assume in this is that your company that you're valuing is based in the United States, and that's where it has its primary markets. That's a simplifying assumption, but in the real world, every valuation is facts and circumstances dependent. So your company might operate in Chile or Asia or Germany, and if it does, you would need to look at the economy in that region where it operates and has its customers and business operations. But for our purposes, we're going to look at the United States. So we are going to look at U.S. economic data, and luckily there's a lot of information on there. We want to know things like GDP, gross domestic product. What is happening with economic growth in the U.S.? What are the markets doing? What are interest rates doing? What's the inflation, unemployment, and housing market doing? If this is a consumer company, we want to know what is happening with consumers. If it's a B2B, which stands for business to business, then it might have a different type of outlook. So we're going to go through what some of these factors are when we consider the general macroeconomic outlook. That is our first step. So again, you've had an economics class where you learned about the U.S. macroeconomy and what things are going on. And if you follow business news, which hopefully you do as business majors and MBAs, you want to know what's going on in a very big picture sense in the economy. Now, this is much easier done when you have the benefit of years of perspective. So when you've lived through high interest rate environments or high inflation environments and low interest rate, low inflation environments, the stock market is expanding like crazy, growing a lot every year. The stock market is shrinking. All these things help you have perspective on what's going on relative to the economy. But there's also a very good free resource that's available to everybody. It's called the Fed Beige Book. And this has information that allows you to get inside what is happening with the economy in addition to looking at business sources. So as I said, a growing economy tends to be useful or lead to higher valuations in some industries. Again, everything is specific to valuation. So just because the economy, say the U.S. economy is growing like crazy, doesn't mean our company has a high value. What really matters is our company one that would benefit from a U.S. economy that's growing, or are there specific things hindering our company? Things like interest rates are very important. Are they historically high or low? Sometimes they are hysterically high. But interest rates have a lot to do with what is the cost of borrowing money for people, individuals, and companies. And those things affect how much of the cash flow generated by those individuals or company gets used toward debt service. So we want to look at where are interest rates relative to the past times. Is money cheap, meaning interest rates are quite low, it's easy to borrow cheaply, or is it expensive to borrow money? Also, what are the major stock market indices doing? What is the Dow doing? What's the S&P 500 doing? What is the NASDAQ composite doing? Those things tend to have more of a correlation on value. So we have companies within those indices and those different markets that might be good indicators of value for the subject company that we are valuing. Again, we also want to know what is the inflationary environment, what's happening with unemployment, what's happening with housing, and what is business and consumer confidence. And some of that information is available when you start searching for general economic sentiment. There are a lot of measures that measure business and consumer confidence. And also, when we look at our specific company that we're valuing, we want to know, does our company sell consumer products? If so, then we want to very much focus on what is happening with the consumer. Is our population in our market shrinking or growing? Do consumers have discretionary income? Do they feel confident in the future or not? If we're in a business-to-business economy, we might look at other measures, like what is business confidence? What type of industries are we in? What services do we provide? Other things that are relevant is, does our company sell products that are essential, they're necessities, or are they luxury items, things that we would like to have perhaps, but we don't necessarily need? So again, is it a business to business company, business to consumer? Is it in the technology sector? And also, does it depend on state or federal authorities for its revenue? Certain industries, like the defense industry, tends to rely very much on federal spending on defense. So whenever there's an election year, you might have different perspectives on what the candidates think about whether they need to spend more money on defense or less. If they say they're going to spend less money on defense, that can have an adverse impact on the valuation of companies that are in the defense industry. So you do need to be in the details on the macroeconomic outlook, but you also need to think big picture about what's going on. If we take it down one level, we can look at the regional impact of our company. So how do not macroeconomic trends, but more microeconomic trends affect the company that we are valuing? And when we say the subject company, what I mean is the company that we are valuing in our valuation. So again, if this is a consumer products company, is the population in our regional markets growing or shrinking? What's happening with unemployment? The higher the unemployment rate, the potential fewer consumers we might have. What's happening with the tax status in our regional market? Are we in a high tax state like California or New York? Are we in a low tax state like Florida, for instance, no state income tax? That can give consumers more discretionary money to spend. And then what is happening with consumer spending and business spending? And these are different sources that you can find will discuss these things, including articles that you find in the business press. We also want to look specifically at the industry that our company is in. And you might have had this in other classes. There's always a question of what is the total market for the industry we're in. So for instance, if we were examining the coffee market, what is the coffee market for the United States? How many billions of dollars are spent on coffee and coffee-related products every year? That's a really powerful thing to know. Is our market growing or shrinking? That's another question. If we're in a growth market, that can tend to bolster valuations. If our market is shrinking, so for example, if we were in the fax machine market, selling fax machines, well, that market is, I don't know if it can shrink any further if it's already shrunk all the way where not many people use fax machines anymore. We now have imaging and our phones to transmit information. So that's a huge question, a big picture question on what our company does and what its market outlook looks like. What percentage of the market does our subject company have? So do we have 10% of a $2 billion market? Is that growing or shrinking again? Who are the competitors? If we think about the coffee industry, we have some major players in that market, Starbucks being the most significant competitor in that industry. And Starbucks also has a fairly large market share. But we also have Dunkin' Donuts, and we also have competition through much smaller entities like a Bill Gray's or something like that, as well as our local coffee shops, as well as the coffee maker that's located in our kitchens for some of us. So competition and substitution, we'll get into substitution a little bit more in a different slide, but those are big factors to think about when you're valuing a company. What are the barriers to entry for a given industry? Some industries, it's very easy for people to get into, the restaurant industry being one of them. If you can get a location and some restaurant equipment and you have some know-how on how to cook different foods, you're in the restaurant business. You could even do that with a food truck now. You don't even need to have a fixed location. You can have a mobile location. But however, if we think about it, if you were to try to get into the electric car business, there are huge barriers to entry in that. First and foremost is technology and know-how, and then also have government regulation of the auto industry. So that's quite a challenging industry to break into. Is the industry driven by technology requiring special knowledge? Is it regulated by the government, state or local? All these are important industry-related questions for your company. And then we have a general look at what is going on in our industry. And Porter's 5 forces and a SWOT analysis, strengths, weaknesses, opportunities, and threats, is a great way to look at these types of issues. What are the threats of new entrants into our market? What are the bargaining power of suppliers? Now, the bargaining power of suppliers is people who supply goods or services to the particular industry that our company is in. If those suppliers have high bargaining power, it means that they can raise their prices of what they're selling to our subject company. So that is a really significant issue. So for instance, if we're in the coffee business and we have one or two suppliers of our coffee beans, and if we don't have many other choices, we can be at the mercy of those suppliers. They can increase the price on us, and there may be not a lot we can do about that. We can't negotiate strongly back. However, if there are a ton of different suppliers, then we have more ability to negotiate and get the best price. Another key of Porter's Five Forces is the threat of substitute products and services. So what is the threat that a consumer or other user will find a different product to use instead of the one of the company that we're valuing? Same thing with services. So for instance, you can think of CPA firms. One of the threats of substitution is somebody who does their own tax returns using TurboTax. That's a service threat to CPA firms. The bargaining power of buyers. So buyers are the people that our company sells to. If those buyers have a lot of bargaining power, then they can negotiate lower prices. Most of us are not used to having bargaining power as consumers. We go into the grocery store, we pay whatever price is listed for the product. Same thing when we go buy clothing and stuff like that. But in some markets, the buyers have a lot of bargaining power in terms of setting the price or negotiating the price of the item that we're buying. Finally, in Porter's Five Forces, what's the rivalry of existing competitors? That's another key factor. And finally, the SWOT analysis. What are the strengths of our company? What are the weaknesses? What are the opportunities of new markets we can get into? And what are the threats? So this should be something that you think about with respect to the subject company that you are valuing. And this is going to help you make an overall assessment of what the outlook is for our company. So we're going to look at a combination of the macro environment, the micro environment, the regional environment, and these other factors like Porter's Five Forces and SWOT to come up with an overall outlook for our business. Is the outlook positive? Is it negative? Is it neutral? Is it cautiously optimistic? There's a lot of nuance we can come up with the outlook, but those are just a few examples of what outlooks can be. Okay, that is our last slide. I hope you enjoyed this lesson and found it useful.